Hey, everybody, welcome back to Doc's Investing RX, the show where we talk real money, real strategies, and real mistakes to avoid on your path to financial freedom. I'm your host, Doc, and today we're tackling an episode I guarantee will hit home. Whether you're just starting out, been investing for years, or still sitting on the sidelines, we're talking about the 7 most common investing mistakes that are quietly draining your wealth. I call them financial malpractice because you might not even realize you're doing something wrong until it's too late. So let's fix your money habits and keep your future self from screaming, why didn't I start sooner? Mistake number one, chasing the hype. You know the story. Your coworker says they doubled their money on some hot new stock or crypto. Suddenly you're on Reddit. Your YouTube is full of top 5 AI stocks and your FOMO is through the roof. Let's be real. We've all been tempted. It feels like if you don't jump in now, you'll miss the rocket. But here's the problem. By the time you hear about it, the real money's already been made. What's left is the hype, and hype doesn't last. Do you remember Dogecoin, AMC, GameStop, Tilray, Rivian, Lucid? It just goes on and on. Some people made a killing. Most people bought high and got wrecked. Were you the one that bought Tilray at $300? The lesson here is if you're investing based on hype instead of research, you're not investing, you're gambling. Here's the fix. Stick to what you understand. Use play money for speculation. I suggest 5% of your portfolio max. And more importantly, focus on long-term growth, not overnight wins. Mistake number two, trying to time the market. Here's a big one. Should I wait to invest until the market crashes, or is now the right time to buy? Let me tell you something. Even the pros can't time the market. So what makes us think we can? Here's what happens. You wait for a dip that never comes, then the market climbs. You feel like you missed it, so you wait for the next crash. Meanwhile, time passes and your money sits still. The beginning of this year, you could have timed it, Trump taking office, everything seemed primed for another run. However, the tariff war started right away and the markets crashed. You could have been on the sidelines, just cash out at some point, and you missed out on the massive rally that happened this past week. Here's a stat. Did you know missing just the 10 best days in the market over 20 years can cut your returns in half? And those best days often come right after the worst ones. Here's the fix. Automate your investing. We're talking about dollar cost averaging. You invest a little every month. Focus on time in the market, not timing the market. Mistake number three, paying too much in fees. This is the silent killer. You don't notice it day to day, but over decades, fees are a monster. Here's an example. Let's say you've got $100,000 invested. If you're paying 1.5% in fees, that's $1,500 a year. Not bad, right? But over 30 years, with compound growth, that's hundreds of thousands of dollars you're leaving on the table. And what are you paying for? Some guy who puts you in the same basic index fund you could have bought yourself? Here's the fix. Use low cost index funds. My favorite is VOO. The fee is 0.03%. Now, say you compare that to a mutual fund or some of these other ETFs that charge 1 or more percent. Compare 0.03% to 1%. That's over 30 times the amount in fees. So ideally, watch those expense ratios. Anything under 0.2% is solid. If you want an advisor, make sure they're a fiduciary, and ideally, fee only, not commission. Mistake number four, not having a plan. If you're investing without a plan, it's like getting in a car with no GPS. Sure, you might get somewhere, but probably not where you want to go. A lot of people start investing without knowing what they're investing for, how much risk they can handle, what their timeline is, when or how they'll adjust things. So when the market crashes or a recession hits, they freak out. They panic sell. They second guess everything. Here's the fix. Write down your goals. Are you saving for retirement, a house, your kid's college? Decide how aggressive or conservative you want to be. Set rules for when you'll rebalance or make changes, not based on emotions, but on strategy. Mistake number 5, ignoring taxes. Taxes aren't sexy, but they matter a lot. Let's say you make some real money on your investments. Awesome. But if you don't think about the tax side, you could end up giving way more to Uncle Sam than you need to. Common mistakes: selling stocks in taxable accounts without considering capital gains, holding dividend heavy funds in the wrong places, or not using tax advantage accounts. Here's the fix. Use retirement accounts first: 401k, Roth IRA, HSA if you have it. If you're self employed, look into a SEP IRA or a solo 401k. Don't sleep on tax loss harvesting. And if you're making good money, a good CPA is worth every penny. TurboTax may not cut it for you. Mistake number 6, comparing yourself to others. Social media makes this so hard. You see someone on TikTok talking about their 6-figure day trading win. Your coworkers bragging about their Airbnb income. Suddenly you feel like you're behind. But here's the truth. You don't see the whole picture. You don't see the debt, the stress, the late nights, or the actual numbers behind the flex. Wealth isn't loud. It's quiet. It's peace of mind. It's options. It's time freedom. Here's the fix. Focus on your goals. Track your progress. Remember, slow and steady wins the wealth race. Mistake number 7, not investing at all. This is the biggest one. The one that silently kills dreams. Because maybe you're scared. Maybe you don't feel ready. Maybe it feels too confusing or overwhelming. So you do nothing. You save in a checking account. You keep waiting for the right time, and years go by. But here's the deal. The best time to start investing was yesterday. The second best time? Today. Even small amounts grow into something big over time. You don't need to be rich to invest. Investing is how you become rich. Here's the fix. Start small, even $50 a month. Automate it so you don't have to think about it. Learn as you go. You don't need to be perfect. You just need to begin. So there it is. The 7 investing mistakes that can quietly rob your future if you let them. But now you know better, and that puts you miles ahead of most people. Let me be clear. You don't need to be a stock market expert. You don't need to make 6 figures. You just need consistency, a plan, and a little patience. Thanks for hanging out with me. If you liked today's episode, take 30 seconds to subscribe and leave a review. It helps the show grow and reach more people. And if you got a question or a topic you want me to cover, hit me up. I'd love to hear from you. The email is og.hollywood@gmail.com. Until next time, invest smart, live well, and remember, you don't need to be perfect. You just need to start.